One of the things that has made this market more challenging through last Friday was the ranges in the Nasdaq. This is a 4-hour chart, 240 minutes, and you see the average ranges in the Nasdaq, E-mini Nasdaq futures approached pandemic levels. It was at the Q4 levels, and it was at the pandemic levels back here. Here's March, and you see right here, let me get the pen out so you can see what I'm talking about. Right here is the peak last week. Back here in at the beginning of February, we had a little bit of that, and these ranges were these were not directional ranges where maybe it opens here and goes up. These were just, alternating directions all the time, and so that makes it difficult to trade. And here are the pandemic levels. If you draw a line across here, you can see where it was in February, March. It went a little higher during the pandemic, during the sell-off. We had that interest rates rising, fast rise in interest rates, so a bit of a spike in the futures, E-mini Nasdaq futures average ranges, and that made it very choppy last week. Strong recovery today, though, so wanted to share this with you to show you an indicator you can look at. That's just the average range of the 240-minute bars. You could try different time frames, and you'll still see the same thing in general to determine when the market is more challenging to trade. It's typically challenging to trade if the ranges are too low or if they're too high. There's a sweet spot for the markets, and when they're in that sweet spot, they're easy to trade. If they go too high, higher than they've been or lower than they've been, it can be a difficult market to trade.